Hey, welcome to Classic Value Investors and Microcap Explosions. So I received a phone call the other day from a good friend, from my best friend, and he told me, you know what, it's amazing that we are both like down on paper $1 million, and now it's like 2 million for me, because 2 million shares of Oracle at $1, it's like 2 million. And he's like, we're down like $1 million, both of us, and we are so cool about it. And you know what? I am so proud of him for saying this, because it hasn't always been like this. And I am so proud of him, and I am so proud of so many of the MCE members. None of them are worried. Nobody's complaining, none of them are screaming. And this is what investing is all about. You see, we as individual investors have such an incredible advantage over the institutions, over the hedge funds, because we can think like owners. We really can. Hedge funds can't. You see, hedge funds, they have clients, or mutual funds, right? They have clients that are not really sophisticated. They're general public, whatever, very uneducated client base. So when you have those kinds of people on your team or with you, you cannot afford to have big volatility or big drawdowns. You can't afford, because you're going to lose clients. So you have to protect your business, which is, your business is collecting fees and gathering assets. Your business is not really generating outsized fantastic returns. That's not your business. Your business is collecting assets, making fees, and generating enough returns so that the clients stay, and generating those returns with very, very low volatility, which is like stupid in its own, because if you know anything about business in general, you know that businesses have ups and downs. You know, it's very hard to predict future with certainty. And yes, some businesses are more predictable than others, but in general, if you know anything about business, you know that businesses are volatile in itself. Consequently, the stock prices are going to be volatile. And you add on top of it macro, all the chatter on media, social media, Twitter, all the nonsense about, you know, how many people are now predicting the crash, or starting or stopping the money printing is going to do this or that. Currency is going to collapse or not collapse. Taliban is going to do this or that. They're all focused on this nonsense that has nothing to do with the ownership of businesses, but that's what distracts people. And you see, if you want to generate, and it's not even, it hasn't even been coined by me, even not Warren Buffett, but Charlie Munger said that if you cannot stomach 50% drawdowns in your portfolio, you don't deserve to earn outsized returns. And it's absolutely true. You see, I think I am down like, I don't know, 30% over the last few weeks, something like that. And I don't even know the amount, because what am I going to do about it? It doesn't matter. Like, my focus is, you know, 1-2 years ahead, not 1-2 weeks ahead. Like, I have absolutely no control what the lunatics are going to do to the stock prices. I have no idea if, you know, the sellers are done with Oracle. I don't worry about the short-term movements, because I have no control over them. And what am I going to do? What am I going to supposed to sell all of my position and rebuy it lower, and then pay all these gains on capital gains, all these taxes on capital gains? Are you insane? No. So I'm not worried about volatility. What I am worried about is the thesis. And is the thesis progressing right? In my opinion, thesis on something like Oracle and my other company, it's progressing very well. That's what I'm worried about. I'm worried about, is the thesis of copper in general, did anything change? Are we not going to electrify the world? Are we not replacing vehicles with electric vehicles versus internal combustion vehicles? Of course, the thesis is still the same. Aren't more people from developed countries from undeveloped countries becoming more developed? Aren't they needing more cables and electric equipment, electric toys? Of course. So the thesis of copper is the same, and it doesn't matter that in the short term the Wall Street might not be so hot on it, because in 2 weeks they might be hot on it again. You just never know. Again, 3 inches in front of your face, you never know, because 3 inches in front of your face is the lunatics that are operating. It's the people that are focused on the short term. And you see, I'm involved in another company right now that we're doing a private placement, and I'm putting like $1 million of my own money into it. And I'm not worried about what the stock price is going to do over the next 2 weeks, a month. I would like it to go up because I'm human, and it feels great when you buy something that it goes up right away. And everybody from MC that's participating in the private placement, of course, they're all going to feel great if after the private placement is done and they buy shares, the stock price goes up. Oh yeah, it's fantastic. But that's not the reason why we're doing this. We're doing this because in 2, 3, 4, 5 years, I want to make $40, $100 million on this idea because it's so good. That's what I'm doing it. And now compare this to a hedge fund, because I know for a fact that the company has been talking to some kind of hedge fund and about, possibly coming in and investing some money. And then that hedge funds, the conversation goes something like this. Well, can you guarantee me that next month your stock is going to be up by 10% because I want to show an increasing NAV so that I can raise more money for the hedge fund? I mean, how crazy is this for the CEO to be on the spot? Yeah, I can guarantee you that the stock price is going to be up 10%. So it's insane. But this is the kind of thinking that they have. They are worried about what the NAV is going to do from month to month, from week to week, so that they can keep their clients satisfied and keep raising money and saying, hey, my hedge fund is going up with little volatility, give me more money. I mean, why do you think Bernie Madoff scammed all these people? Because that's exactly what he offered them. These stupid, uneducated people, he offered them, hey, I can give you 12% every year, no volatility, guaranteed, and they all went for it because, they're sheep and they don't understand anything about business. And in this company's case, it's the same. The hedge fund is worried about what the clients are going to think, and they might probably not invest. They're probably not going to invest in something that's going to make me probably 100 million. They're not going to invest in 100 bagger because they're afraid what it's going to do to their business in a short period of time. So look, guys, if you're an individual, you have an incredible advantage in thinking properly, in thinking it differently, not being an idiot, just thinking like an owner, which means you got to stomach the volatility. No matter what positions you're in, you got to stomach the volatility. Because if you hold something for 5 years, you think it's just going to go up in a straight line every month just because you own it? You think you're that special? You're not that special, okay? So you're going to have volatility, and you're going to act like an owner. You got to hold it in good times, in bad times, and just worry about the thesis. Don't worry about what the people on Twitter and the media are talking about, because they're just blabbing and blabbing because they want ratings. They're not blabbing because they want to make you money. If they did, they wouldn't be talking about the things that they're talking about, because they have nothing to do with some businesses. Some businesses are going to do fine no matter what. If people get vaccinated, don't get vaccinated, if we get COVID, we don't get COVID, it's going to be fine for some businesses. Yes, for businesses like airlines or cruises, yeah, that matters. But I don't even know why you would be in those businesses, because they're shitty businesses to begin with. So I'm not even sure why you would invest in them. Invest in good stuff that's going to do well no matter what the macro environment is, because they have their own trends and they are solving problems for particular groups of people or clients, and they have fantastic businesses, modes, switching costs. Focus on that, ignore the rest of it. So anyway, that's it for this video. I just wanted to say that I'm so proud of the MCE members. I'm so proud of my friend for realizing that, you know, volatility is part of the game, nothing to worry about. I can't even tell you how many times my personal portfolio was down 50% over the last, you know, 12 years. Like, I lost count how many times I was down 50% on my portfolio. So if you can't take downside volatility, just get out of the market. Just buy yourself some index fund or put your money in the bank. Definitely don't subscribe to this channel. Like, just unsubscribe, you know, listen to some other nonsense. But you know, we are not in the same philosophy if you can't take drawdowns. You know, this channel is for people who want to build long-term wealth, and you know, they act like owners. They understand the volatility is part of the game. So anyway, that's it. Have a good one.